Good afternoon. The Coventry-based water supplier Severn Trent has confirmed it's received a takeover approach from a group of international investors. It's reported the company could be bought for more than £5 billion. Well, joining me is Professor David Bailey from Coventry Business School. So what more do we know about this proposed deal?
3 potential investors looking at the company. The share price has already jumped considerably on the back of this, and it's not a surprise in the sense that water companies and utility companies are very profitable, so they make very attractive targets for foreign investors. So if you're a pension fund or a sovereign wealth fund looking for a safe investment, this is exactly the sort of thing that you'd go for.
And what do we know about these investors?
One of them is the Q80 Sovereign Wealth Fund. The other 2 are pension funds. One of them is the university scheme, the scheme I pay into, so I'm rather pleased about that. The other one is a Canadian pension fund. So 2 pension funds, a sovereign wealth fund looking for a safe place to put their money. And they already own some infrastructure in the UK. The Canadian fund, for example, owns already, for example, High Speed 1 that links London to the Channel Tunnel.
And you mentioned earlier that shares in the company, they jumped 15% today. What impact could that have on the future of the business, for example, jobs?
That's the big question, really, because we don't know whether these investors are actually going to bring investment to put into the company. And what's really important is driving up the quality of service. So this company at the moment, I think, fails to meet 8 targets that are set by the regulator. So we want to see more investment in the firm, an improvement in the quality of service. The big question is whether these foreign investors will actually do that.
And what about prices for customers? Do you think they could change if this deal goes ahead?
They shouldn't, because this is a regulated industry. So the water company is a monopoly. There's no competition. It's regulated by the regulator Ofwat, so that shouldn't actually impact on consumers. The big issue for consumers really is over the quality of service and interruptions, for example.
So what will happen or could happen next, do you think?
Well, there's a kind of time scale now from here on in, which the bidders have to meet in terms of meeting stock market rules, and we'll see whether or not they actually put in a bid or not. The big concern for me is about the public interest and whether it meets consumers' interests.
Professor David Bailey, thank you very much for joining us this lunchtime.